Hey guys, and welcome back to my channel. So today I'm going to be talking all about being self-employed, and more specifically whether or not it's expensive to be self-employed. So a month or so ago, I quit my 9-to-5 job to pursue my side business as my full-time job, and since doing that I have learned a lot about being self-employed, and I'm still figuring some of it out. So I wanted to just share some of the stuff that I've learned and experienced so far, and I'm sure I will be doing more videos related to this as I kind of go on, but I wanted to share some key points in this video, specifically what health insurance looks like, what dental insurance looks like, and then retirement savings, because those are probably the main factors that I thought about when I decided to quit, or when I was thinking about quitting. So if you haven't checked out my I Quit video, that's a few weeks old, definitely go check that out. I go into more detail about why I decided to quit, and more about like my business and what I'm doing and all of that fun stuff. So I'm gonna start off with health insurance. I feel like it's a myth out there, and I've heard this my entire life, that health insurance is super expensive. And health insurance is expensive because if you think about it, you're paying a monthly amount, and it's supposed to cover the fact that you could have like millions of dollars worth of expenses. So health insurance in my eyes is something that's kind of like a necessary evil. You have to have it, especially in our family, because Jason has a heart condition, and so we can never go without health insurance. So when I was deciding to, or thinking about quitting my job, health insurance was probably the #1 factor, and trying to figure out what that meant for us. So we went back and forth whether Jason would go back to work, whether we would do COBRA, which is basically like buying health insurance from your old employer for a period of time, or if we would just do like self-insurance, like through Blue Cross or Cigna or whatever else. Ultimately, we decided to do self-insurance, basically just through the same insurance company that my company had insurance, but just pay for it ourselves. And so what that looks like, every month I'm paying a monthly amount, which is very similar to what was happening with my employer. It would get taken out of my paycheck actually twice a month. So in terms of prices, this is something that, again, I feel like a lot of people think that this is probably super expensive. So right now, with our new self-insurance, we are paying just over $1,300. So every single month for health insurance for my entire family, I am paying $1,327.02, which sounds like a ton of money. And I agree, that $1,300, that's a lot of money. But when you consider the fact that I was paying quite a bit of money already for health insurance through my employer, it doesn't seem as much. So through my employer, every single month, and this is my portion, like what was coming out of my paychecks every 2 weeks, or every month I should say, the monthly amount was $922, which is a significant amount. Again, that is for myself, Jason, and Macy and Mila. With both plans, it doesn't matter how many children you had, but if you had one, you were considered the family plan, and so it was a base rate for, like, you could have 10 kids and it would still be the same amount per month. So that ends up being a $405 difference. So still more expensive, but not that much more. Like, I thought it was going to be double or maybe triple what I was paying through my employer, and that just wasn't the case. Now, keep in mind, our out-of-pocket now is significantly more. So for our family, worst case scenario, all of us hit our max out-of-pocket, that would be a $10,000 difference. So now with our new insurance, we'd be paying $10,000 more than if we hit our out-of-pocket for the entire family through my employer. That's a lot of money. $10,000 is definitely a lot of money, but the chances of us hitting our complete out-of-pocket for the entire family is pretty low. And with that being a known factor, like, hey, worst case scenario, we all have really bad years medically, we just know that we have to put that money aside and have that money ready so that if that unlikely event occurs, we have the money. So just kind of keep that in mind. It's definitely something that I mean, monthly it's more expensive, and worst case scenario it's more expensive, but it's something that you can kind of work into your budget or your plan and make it work. The other thing I briefly mentioned on before was COBRA. So COBRA is basically, and I'm not a professional at any of this, I should just mention that right now, I'm just going off of what my research said. COBRA is basically where you have the option to purchase all of your benefits that you previously had through your employer. But instead of paying my $922 a month, I'd be paying my portion and my employer portion, what they were covering for me. So our insurance that my employer was purchasing for us, the total amount would have been over $3,000 for health insurance alone. And I'm not sure exactly the term, but I believe the max amount of time that you can have that insurance would be 18 months. So when I did the worst case scenario through both plans using the COBRA and the new insurance that we have by ourselves, we ended up saving more money doing it by ourselves than doing it with COBRA. So that's kind of my research behind that. I looked at a lot of different scenarios when it came to health insurance, because again, for us, health insurance is really important, and we just ultimately decided doing it on our own was just the best option. Now keep in mind, with health insurance and with dental, when you own your own business or when you're self-employed, you can deduct that as a tax deduction. So basically, and again, don't quote me on this, definitely talk to your tax professionals. It's something that our tax professional mentioned a few years ago when I decided to open my own business, and she saw that income coming in, and she's like, you know, if you ever get to that point, you can definitely take that money and you're not going to be taxed on that money every month. So that's something to keep in mind, because again, it's the same exact thing that's happening with your insurance through your employer. You're not getting taxed on that, but just kind of keep that in mind, that that is something that you can kind of factor in. Okay, so in terms of dental, I feel like dental is not that big of a deal. Like, I honestly feel like some people don't even have dental insurance, but it is something that we wanted to have just because, like, Jason's entire family had braces. Luckily, I think my sister got it later on, but like me, my sister, and my brother, we didn't need braces or anything as kids. So with Jason's history, I definitely wanted to make sure we had something in line. Plus, if it saves us a little bit, it probably makes sense to like have some dental insurance with the kids. So anyway, with my employer, I was paying $63.64 per month for the entire family. Right now, we are paying $110.30 per month, which is obviously higher. It's, you know, over $40 higher, but our insurance now with dental is actually better than my employer's insurance was. Now we have the option to have braces, and it's covered up to a certain amount for the kids. It's not covered for us. Once they're 19, it doesn't cover them anymore. But again, just another thing that we had to consider when we're purchasing insurance. Now, our insurance is, our dental and our medical insurance are through Blue Cross of Illinois. So when we move, the rates and the coverages could be different. So that is something that we'll definitely have to keep in mind. Our insurance will not raise. Like, this was another concern that I had, and I actually reached out to Blue Cross to actually get this information. So our rates are based off of our zip code. So they ask you very specifically before they give you a quote, what is your zip code? And they ask you a few other questions. I was worried that, like, with Jason's heart condition, if he goes to the doctor a lot or if he has to get heart surgery or something, will that make our premiums, like what we're paying every single month, more expensive? And he assured me that that is not the case. Now, again, this is my experience. This is what I came across, but I don't know if that's necessarily the truth. So that is something that we will definitely learn as we go. But the provider that I was talking to did reassure me that that would not be the case, that we would not have a higher monthly amount come like next year if we do have a lot of medical issues throughout the year. Okay, so in terms of 401k and pension, or just retirement savings in general. So like I've been doing this whole video, I've kind of been comparing it to my old employer to now. And this is the part that I'm like still exploring. I don't have a solution right now because I feel like there's a lot of things to consider, but I wanted to just let you guys know what I'm thinking. So at my employer, I did have a 401k, and through that 401k, I would get 2% match up to $2,500. I think that is, I'm pretty sure that is what it was. I honestly didn't pay attention to it because when I first started, I figured I'm gonna get the entire match. So I set up so that I would have like a percentage of my salary go, so I knew I would every year get that match. So like once I first enrolled in it, I never really paid attention because I figured as my salary grows, I'm gonna be maxing out that match anyway. So anyway, I believe it was 2% up to $2,500. I also had a pension. So before I started, honestly, a few months before I started at my company, they had a defined benefit pension plan. A few months later, when I started, they switched it to any new employers or employees would be in the cash-based pension. So that was, you know, that's what I have through my employer. So for the last 6 years or so, my cash-based pension has increased to just under $30,000, and there's probably another year in there that I don't know like what it's grown to, but in the last year or so, it grew about $8,000. So I'm assuming it's probably going to be close to the $40,000 mark when they like redo the calculations and send me what my ending balance is. Now, because it's cash-based, I can roll that into whatever retirement plan I decide on. So my old 401k and my cash-based pension will be able to be rolled into whatever plan I decide to go with. And that's where I am today. So right now, I'm really debating whether I want to do a solo 401k, which is basically a 401k that you can use when you're self-employed. And the only couple of things that you need to know about a solo 401k, and definitely do your research. Like if you are considering this, definitely do your research on every single topic, because this is my experience. These are the people that I've been working with, but of course it could definitely change over time, and depending on what companies you're working with, it could be different. So for me, the solo 401k seemed like the best option, and I've spoken to different plans and all of that, and basically some key takeaways that I found is, one, the solo 401k can only work if you have no employees. So if I ever decide that I want to hire somebody, then I'm gonna have to switch to a different plan, because it's really only when you are on your own, solo. Now, if I have someone come, like I have in the past, and just help me out here and there, that's okay according to the provider that I was speaking with. But if I have an employee on my payroll, that is when it will not work. I'll have to switch to something else. So that is something that is definitely kind of holding me back, because I don't know, like in the future, maybe I will have employees. Like, who knows? You can dream, right? So that is one thing that I have been trying to like keep in mind. With a solo 401k, one of the benefits of having the solo 401k is, unlike an IRA, you can actually contribute all the way up to what your 401k would be with an employer. So I think right now it's close to $20,000 per year. With a solo 401k, you can do that as well. With a solo 401k, you can also do a profit sharing where your business can contribute more money to the 401k above that like $19,000 or $20,000 per year, which is great. If your business is doing great, if you're like, okay, you know what, I'm doing good enough that I can put more towards retirement, that is a great option. But with a solo 401k, the provider definitely cautioned me that if you plan to take any money out before retirement, that it's a lot harder to do that. And honestly, he made it seem like you couldn't, which is not something that I want to go into any plan thinking like, hey, you know, I'm planning to take money out of this retirement account, because in my mind, I've never considered that. Like even when we were buying our house, I never considered taking any money out of my, you know, my retirement savings. But it is something that you have to consider, because sometimes people use that as like a fallback. For us, we have an emergency fund. We feel like that is significant enough so that if something happened, we'd be okay. But it is something that I wanted to mention, because it's a big factor. Like other plans you can definitely borrow from or take money out of. Of course, there's penalties and all of that, but that is something to keep in mind. The other thing that I've been considering is doing like an IRA, and obviously the amount that you can contribute is a lot less per year. So I'm still working on that, but I just wanted to throw a couple of those out there because I have done the research, I just haven't finalized anything yet. And with that being said, of course, like if you think about the fact that like now I'm not getting that 2% that my employer was covering, I'm not getting that, you know, $2,500 per year for my 401k that they were matching. I'm also not getting my pension, which honestly, like $40,000 over six years, that's pretty good. I wanted to say, with everything that I've mentioned here, to keep in mind that when you're self-employed, your income is limitless. You could really do and make as much money as you possibly want, as long as you're working hard and working smart. So yes, health insurance, yes, dental insurance is more expensive. And yes, I'm not getting the 401k benefits, I'm not getting my pension benefits, but if you budget all of that into your finances and you figure out a way that you can make that up by making more money and putting that away into those accounts and making sure you have what you need to retire and fund medical expenses and all of that, then it's okay. So in my mind, when I think of being self-employed, I don't think being self-employed is expensive. I feel like it is the hugest blessing to be able to do what I'm doing, that I am honestly living the dream, that I'm able to take care of my family and provide all of the things that I need to by doing something that I love. So yes, there are definitely things that you have to consider when it comes to benefits and, you know, when you're quitting your job, but I definitely think that it's worth it. I wouldn't say that it's expensive. I just think that you have to look at it a different way and just plan a different way. And with that being said, that is pretty much all I have for you. If you guys have experience with being self-employed, again, I'm really new to this. If you have experience with being self-employed, with medical insurance, dental insurance, with, you know, funding your solo 401k or IRA, let me know down below, because I'm sure there's going to be someone that's watching this video that wants other people's perspectives, and it never hurts to have some other opinions. So let me know down below if you have experience being a business owner and, you know, doing it yourself and figuring all of this out. And other than that, I'll see you guys next time. If you guys have any other questions related to being self-employed, let me know down below, because this whole video idea came from someone asking me, like, what about health insurance? And I was thinking, you know, this would be a good video to film for you guys, to let you guys know that it is possible. Like, I remember thinking, there's no way I could pay for health insurance. There's no way. Like, if I do this, Jason's gonna have to go back to work. And that was another question someone asked. Jason is still a full-time stay-at-home dad. He's taking care of the girls. I'm working like a full 40+ hours a week doing YouTube and my Etsy shop. And so it is definitely possible. If you just put in the work and if you just do all of the planning and researching, it is definitely possible to have all the benefits that you had with your employer and just do it on your own now. So again, thank you guys so much for watching. Let me know if you guys have questions down below, and I will see you guys next time. Bye guys.